You're listening to the Exponential Entrepreneur Podcast. This is the podcast for ambitious entrepreneurs who understand that exponential business growth isn't achieved through traditional business tactics alone, but through personal development, the ultimate leverage point to scale businesses beyond conventional limits. Hosted by Erica Ferenczi, featuring lessons from the Practical, Profitable Mindset program, created by R. John Robbins, Alejandra Leibovich, Erica, and Oscar Ferenczi. And here's your host, Erica Ferenczi.
This is the truth. Either you control your money or money will control you. As entrepreneurs and business owners, it is very easy to stay busy, serving clients, growing teams, chasing opportunities. But there is something far more fundamental. Knowing your numbers to understand if all that hard work and running around is going to pay off in actual money for your family. Because the reality is that if you do not know the key financial numbers for your business, you will likely end up in a scenario in which all of those sweat, blood, and tears will earn you zero, squat, or simply just not enough. The first thing you want to know is, number one, revenue. Revenue should always be your starting point. No opinions, no guesses. You have to know what is the actual money coming into your business. If you know this number, you will gain clarity on what your business truly produces, good months and bad months included. Without this baseline, every decision you make will be built on bullshit. And we will use the bullshit definition given by Dr. Professor Henry Frankfurt on his book called On Bullshit, where he defines bullshit or a bullshitter as the person for whom all bets are off because he is neither on the side of the truth nor on the side of the false. He doesn't care. His eye is not on the facts at all. He does not care whether the things he says describe reality correctly. He just picks them out or makes them up to suit his purpose. For you, it is important that you base your decisions on facts. And understanding things like the average client value and payroll alignment is fundamental. Because once you understand what each client is worth on average, you will finally be able to see whether your team is sized correctly. Because payroll is going to be one of the largest expenses. But it's not only an expense, it is an investment. And every investment must produce a return. When payroll outpaces revenue, the business silently slips into danger. The other concept is gross profit. Gross profit determines freedom or stress. Because after you make payroll, what is left must support everything else: rent, marketing, IT, finance, HR, and most importantly, profit. If expenses exceed what remains, you're not running a business. You're funding a loss. And knowing this number will give you power, the power to negotiate, the power to cut, the power to hire, the power to grow intentionally. This week's lesson isn't about accounting. It is about leadership. And it starts with knowing your numbers and focusing on profit. Let's join Oscar Ferenczi on this episode. Oscar Ferenczi, who is not only the co-creator and one of the 4 facilitators of the Practical, Profitable Mindset program, but also a serial CEO who has dedicated his life to scaling companies, running mergers and acquisitions, and helping enterprises experience explosive growth. With a background in finance and a specialty in leadership, this will be a treat. Let's listen to Oscar.
This week, we're going to be talking about knowing your numbers, how to manage your numbers, how to get to know your numbers, how to spend in accordance with what you're making, not more. One thing that we're starting to see is that a lot of you are spending more than you can bring in, and you need to start controlling your expenses before you start running into trouble. And so what I am going to try to teach you this week is how to do this in the back of an envelope, which I did this morning for HTM. Okay? And the back of the envelope doesn't mean this is your Bible. It means it's your guide. And this guide ought to help you go back to your C-suite or go back to your accountant or go back to whomever it is that manages your numbers to help you get the answers you need in order to manage your business. Okay? So we start, guys, with revenue. It's what makes the world go round. You cannot save yourself to success. You can only sell your way to success. So the more revenue you bring in, the more opportunity you have of being successful. You can try to cut back on expenses, but there's never enough money on your expense account to get you to the levels of revenue that you have probably forecasted for yourself. So the first thing you guys need to know is, what is your average case value? Average case value. In terms of my world here in HTM, my average case value is about $3,200. Okay? How do I get $3,200? I take a look at all the money that comes in every month and I divide it by the number of members that I have. That's it. That's all I need to do. In your case, you have to know what your average case value is and divide that by the number of cases you currently have. Okay? And that will give you an average. So you're going to say, all right, but I don't know what my average case value is. Well, just take what you brought in revenues last month or the month before that, or take the last 3 months of revenues and divide it by the number of cases you had each of those months. And that will give you an average case value. And if you are a PI attorney, we can talk about that as well. In my world, it's not very different. What is different is how you bring in the money. But what you have to do, other than the regular attorneys, is estimate how much you're going to be bringing in every month. So every case needs, let's call it a budget, an individual budget per case. And there's got to be assumptions that you made that will tell you how much money you expect to bring in from every case. But we'll go into discussing this as we move on. So what should every case generate on a monthly basis? So let's just say you got $100,000 this month in revenue and you had 100 cases. What is your average case? What is your average case value? You take the 100,000 divided by the 100. That is your average case value. Don't overcomplicate it. Don't say, yeah, but I got some that are higher and some that are lower. I understand you have some that are higher and some that are lower. It doesn't really make a difference. What you need to know is, what is your average case value? Okay? Because that's going to help you project what your revenues are going to be as you move forward. If you do not have that, you're walking on unknown territory, uncharted water. You don't know how much money is going to come into the firm, and thus you have no clue how much you can spend. And this is where we're seeing a lot of you overspend, because you're not spending in accordance with what is coming in the door. You have no projections for what is coming in the door. All right? Then you got to take a look at your trust account. How much money should be in your trust account? Well, your trust account shouldn't have more than your average revenues for 1 month. If you have more than 1 month's worth of deposits in your trust account, it's that you're not working through your trust account fast enough. And so you're going to get all kinds of customers that are going to be upset that their cases are not moving forward at the speed they would like. Okay? And you're clearly going to have an issue with accounts receivables. If you can't take the money out of your trust account, you're going to have cash flow problems. So as a rule of thumb, your trust account shouldn't have more than 1 month worth of revenue in it. Any more than that, you're going too slow. Any less than that, you might have an issue with productivity. In other words, if you're going through your cases very, very fast, just make sure, while that is a good thing, make sure that your costs to deliver those services are not outpacing your profit. So you could be going through your trust on a weekly basis. Let's say you go through it on a week Every week you clean out your trust account. The problem you could have there is that you have more bandwidth to handle cases than you should. And so you're running expenses at a higher rate than you ought to be running. Okay. Now, once you have figured out what your monthly revenue is, then you have to estimate what your cost of goods sold is. And for that, all I do in my world is take the number of advisors that I have times the average salary that I pay them and divide it by 12. And that gives me a feeling for how much payroll I will have this month. And then I will take my second tier of employees, which are not the advisors. They are the support staff. They are the accounting people. They are the legal staff. They are the administrative staff, the operations people, the events people, all of that, which obviously have a much greater difference in how much they each make. And I estimate again, how much do I think is my payroll for this second tier of people? And I multiply that by the number of employees that I have, divided by 12 once again. And now I know what my average payroll is going to be between the tier one, which are the advisors. And I call it tier one because it's my greatest number of employees. In your case, it would be lawyers. It's your more expensive line item. So how many lawyers do you have? At what average salary do each of these make? And you multiply that, divided by 12, and that's your payroll expense. The same with the rest of your staff. Take what it is that you think everybody's making on an average basis, multiply by the number of employees, divided by 12, and that's your cost for employees. Cost of employees includes your lawyers, your paralegals, your administrative staff, yourself, anybody who's on your payroll. Now you know what your revenue is. You know what your payroll is. Whatever is left is your gross profit. Okay? Once you know your gross profit, you now know how much money you have left over to run your firm, to pay your rent, to pay your cars, to pay your photocopy machine, to pay for witnesses, to pay for all of the expenses that you have in running your firm. If you do not have a grasp of this, you will begin to run at a loss, or you could be running at a loss already. So again, to the question that I see two people are asking, take the number of lawyers you have. Let's say you have 3 lawyers, and let's say your average payroll for those 3 lawyers is $150,000 each. Your average monthly expense is 150 times 3, which is 450,000, and you divide that by 12, which gives you 37.5 thousand. So $37,500 a month is your average payroll for your lawyers. Now, let's say you have 10 support staff between paralegals and administrative assistants and everybody else in your staff, 10 people. And let's say your average is what? You want to say it's $75,000 each for argument's sake, and you have 10 of them. So again, 75,000 times 10 is $750,000 divided by 12. You have an average cost of $62.5 thousand a month. Are we good there? You add 62.5 plus 37, and you're now running $100,000 cost of goods sold on a monthly basis. You do not need the numbers to the nth. I don't care what the exact number is. So long as you know how many employees you have and what your average payroll is for these people, you can start understanding what your numbers look like. So in this very practical example, you have a payroll cost of $100,000. If you are generating any less than $100,000 a month, you are running at a loss. We don't have to argue this. We don't have to make a lot of assumptions here. You need $100,000, no less, just to pay payroll. And that is why when I was talking about you need to know your revenues, this is why it is so important. What is your average case value and how many cases do you have? Again, if your average case value is $10,000 and you have 100 cases, well, it's 100 times 10,000. 100 cases times 10 grand each is $1 million. You have 100,000 in payroll. You have a gross profit of $900,000. That means you have $900,000 to pay for everything else. Your rent, your marketing expense, your utilities, your cars, your insurance, everything else that you need to run your firm. If you don't know what your top number is, your revenue number, you have no clue how you're doing in your business. You have no clue whether you're going to make enough money to pay for your expenses. All right. I see a lot of questions already. Let's start trying to address the questions and let's start trying to get some actual meat in this bone.
I'm in a cash crunch and I foresaw the cash crunch because of my pipeline report. I'm trying to get out, but like everybody else saying, the leads are pretty much drying up, especially for PI. We started a criminal defense area in January, and the associate I hired to work that is really having a hard time understanding that the amount that we're charging for these petty crimes isn't netting the income that we need. So with that being said, I don't know if I need to move out of that practice area. I've made the revenue goal for the year. We set 650. We have 665 as of October, but there have been months where we've operated in the red. Months where we only brought in 17,000, months where we brought in 21,000, 22,000. And the number looking at payroll, our payroll is 58,000 a month. So we had a really good month in January, which allowed for us to have the operating money for months to come. But now we're interviewing for an intake specialist position because everyone is so freaking overwhelmed. No one can do intake. The receptionist, she can't handle all of the calls that are coming in, but it's just coming in for the petty criminal law cases. It's not coming in for PI. We get Social Security here and there. So those are our main 3 practice areas. So I don't understand why I'm even interviewing for an intake specialist position where we can't even pay the current staff. So we have a receptionist, a legal assistant, a paralegal, and 3 attorneys. 1 attorney handles only Social Security. 1 handles crim law and PI. I handle both PI and Social Security when it's too much. And of course, trying to grow the firm. Would like to step out of practice, but I can't because no one understands that they need to help get clients. And should I even be asking them to help bring in clients on their own? So I'm marketing for the firm.
I don't know enough about your firm to answer all these questions. What I do know is that you need to do a return on investment, ROI analysis on the business, okay? Which is why you have a C-suite. He should be able to sit down and understand your business. And if you have the numbers, he ought to be able to take a look at the numbers and in 10 minutes bring out a conclusion for you on whether you're making money or not making money. Okay? So I can't tell you right here, yeah, go ahead and get out of that business. I don't know if the business is profitable. I haven't seen the numbers. But you need to look at your numbers before you make a decision to step in or step out. Okay? So don't jump the gun and say, I'm out, because you really don't know why you're out, much the same as you don't know why you're in. You really haven't taken a look to see if it's profitable or not. So when you say, I don't know why I'm even hiring more people that can't pay for themselves, I don't know if they can't pay for themselves or not. I don't know if it's a problem with productivity. I don't know if it's a problem with bandwidth. I don't know if it's a problem with the marketplace. I don't know what the problem is right now. What I do know is that anybody who is a CEO will be able to sit down with you, understand your business, look at your numbers, and come out with a conclusion within an hour of having a conversation with you. It does not take longer than that. And so get your C-suite involved quickly on what is happening. As I said before, the same way you're going to bust every one of your vendors' backs to give you more, you go talk to your CEO. He's another one of your vendors. and hold them to that same standard where, listen, I need answers. I don't understand what is happening. I want to know. Okay? Because everything else right now is we're going to get in the weeds of I'm not really sure what, but it's not going to answer the question you're having, which is, should I continue to double down on this or get out? That is the right question. I don't have the right elements to answer the question. Neither do you. That is why you need to know your numbers. This is why you have to look at your numbers every single month. What did I bring in? Is my average revenue higher or lower than every other month on average? Am I trending in the right direction? The answer is yes, you're okay, because you'll be able to pay your expenses. Are my expenses higher? Are they lower? What do I need to adjust? Do I need to increase my revenue in order to foot the bill of my expenses? Those are the questions you need to answer. So you really need to understand where your business is in terms of your numbers and your financials to know whether you have bandwidth and leeway to foot the bill, or whether you're running at a huge expense that is eventually going to catch up to you and run you into the red. You don't want to go there.
No.
So please engage your C-suite.
Okay.
Okay?
Thank
Good deal.
Welcome back. This week's lesson delivered a clear message. Financial clarity is not optional, it's essential. Oscar talked about anchoring the business in real revenue. By tracking the average monthly income, business owners stop relying on hope and you can start operating on facts. Because revenue defines what's possible and what is not possible. He also talked about the importance of matching payroll to productivity. Every single role in the organization must justify its cost. When you understand the average client value, you can quickly see whether your people, your vendors, your systems are truly paying for themselves or quietly draining the resources. And third, we reinforce the role of gross profit as the ultimate decision maker. Gross profit determines whether expenses are sustainable, whether investments make sense, and whether the owner is actually being rewarded for the risk they carry. A healthy business should generate strong returns, not just survival. This lesson isn't about spreadsheets. It's about discipline. And discipline begins with visibility. And that is what the Exponential Entrepreneur Podcast is for. And now it's your turn to take action. Stay healthy, stay hungry, and stay focused. And we will see you next time.
Thank you for listening to the Exponential Entrepreneur Podcast. We encourage you to take action on it today. Share what you've learned with another entrepreneur. Sign up for our newsletter to get bonus content you won't get anywhere else at exponentialentrepreneur.com, and subscribe to the Exponential Entrepreneur Podcast to receive the next episode. Until next time, keep breaking through limiting beliefs and growing exponentially.